All right, let's get right into it. Something really big is happening in the US banking system, and it's set to roll out in 2026. Now, this isn't some tiny little update we're talking about. These are major fundamental changes that are going to touch everything. Your paycheck, the way you pay your bills, how you're protected from fraud, even who gets to control your financial data. And the crazy part? Almost nobody is talking about it. And look, that's not just me trying to scare you. Those are the real stakes here. The entire system that we've all gotten so used to is basically being rewritten. The part that banks aren't shouting from the rooftops is that one little hiccup, one transaction that looks a bit out of the ordinary, and your own money could get put on ice. Even if you've done absolutely nothing wrong, most people are going to be caught completely off guard by this. We're here to make sure you're not one of them. So here's how we're going to tackle this whole thing. First, we'll dive into the new security rules and what it means when we say banks are watching your money like never before. Then, we'll look at the nuts and bolts, the real practical changes you'll see in your daily transactions. From there, we'll get into the good stuff, how you're actually getting more control over your money and your data. After that, we're going to zoom out a bit to understand the why behind all these shifts. And finally, the most important part, we'll wrap it all up with a clear, actionable checklist so you can get ready for 2026. All right, let's kick things off with the one thing that matters most to us: keeping our money safe. This first wave of changes is all about security, and it means your bank is about to get way more involved in what's happening with your account. Okay, so here's the absolute heart of the change. It all comes from an organization called NACHA. You've probably never heard of them, but they're the ones who set the rules for pretty much every electronic payment in the US. They're putting a new rulebook in place, and the key thing to understand, the part that changes everything, is that banks now have to watch the money coming into your account just as closely as the money going out. And you can really see the difference right here. You know, for the longest time, fraud protection was like a one-way street. Banks really only cared about suspicious debits. That's money leaving your account. But now, it's a two-way street. They're going to be looking at the credits, your paycheck, your tax refund, any money that's sent to you with that same intense scrutiny. This is a massive shift in their whole philosophy. So, you might be asking, why do this? Well, it's to fight these really clever modern scams where criminals use fake deposits to trick the system. And this new rule is great for stopping that. But, and this is a big but for you, this extra sensitive monitoring could sometimes flag perfectly legitimate money. So, let's say you get a surprise bonus from your boss, but it lands in your account on a Wednesday, and your normal paycheck always hits on Friday. The bank's computer might see that, think, that's weird, and put a temporary hold on it. It's going to be frustrating for sure, but that's a trade-off for catching the bad guys. A huge driver behind these new rules is the absolute explosion in what are called social engineering scams. These are the really nasty ones. This isn't about someone hacking your password, it's about them tricking you into sending them money. They'll call you up, create this intense sense of panic. Hi, it's the IRS, or your grandson is in jail, or we've detected a virus on your computer. It's all about playing on your emotions to get you to act fast without thinking. Now, this right here, this is a massive win for all of us. Before, if you fell for one of those scams, banks would often just shrug and say, well, you authorized the payment, so our hands are tied. The 2026 rules completely change that. For the first time, there's a legal definition for payments made under false pretenses. What that really means is that your bank now has better tools and, frankly, more of a responsibility to help you fight to get that money back. They have to take you seriously now. And this slide shows off one of the best new tools in your corner. Think about this. In the old days, if you saw a sketchy pending charge, you usually had to just sit there and wait for the money to actually leave your account before the bank would do anything. That's over. Now, using a process with a clunky name, a written statement of unauthorized debit, or just WSUD, you can report that pending charge, and the bank can slam the brakes on it before it clears. This is an absolute game changer. It means stopping the theft before the money is even gone. Okay, so let's shift gears and talk about the second big area of change. These are the real, tangible differences you're going to see every single day, just by looking at your account from what your bank statement looks like to how you get your government benefits. Oh man, we have all been here, right? You're trying to do your budget. You're looking at your statement and you see this gobbledygook. It's just a random string of letters and numbers. What is it? Did you buy something? Is it a bill? Is it fraud? You have no earthly idea. And it's just so frustrating. And now look at this. It's like a breath of fresh air. The new rules say these descriptions have to be standardized and written in plain, simple English. So that cryptic nonsense, it becomes something you can actually understand instantly. This is what's coming in 2026. And I know this seems like such a small thing, but the ripple effect is huge. Your salary, it's got to be labeled payroll. Something you bought online. It'll say purchase. Suddenly, budgeting becomes 1,000 times easier. But even more important, it helps you and your bank's computers spot something fishy right away. You see a purchase from a store you've never shopped at. Boom, you know to flag it immediately. And speaking of big changes, 2026 is also the final deadline for another massive shift in how people get their money. For millions of Americans, this year marks the end of an era. The paper check for federal benefits is officially on its way out. And the reason is all about security. Mail theft and check fraud have just gone through the roof. Criminals literally steal checks from mailboxes, use household chemicals to wash the ink off, and then rewrite them to themselves for thousands of dollars. So to fight this, the Treasury is saying no more. You'll have to switch to either direct deposit into a bank account or get a prepaid debit card that's loaded with your funds each month. Now, humming along in the background of all this is the rollout of something called Fed. Now just think of it as a complete revolution in how fast money moves. Instead of having to wait for the next business day, or sometimes several days for a transfer to go through, money can now zip between banks in seconds. And it works 24/7, 365 days a year. But this leads us to the two sides of the instant payment coin. On the one hand, it's amazing. You get paid faster. If a family member has an emergency, you can send them money, and they get it right then and there. But there's a pretty big downside. Fraud can happen instantly too. A scammer could potentially drain an account in just minutes, which gives you and your bank way less time to stop them. And this is exactly why all those new security rules we talked about earlier are so absolutely critical. The money is moving faster, so the protection has to be faster too. Okay, let's talk about something we all want more of. Power and control. This next batch of changes is all about putting you, the consumer, back in the driver's seat by giving you more say over your own financial data. And finally, tackling the painful topic of fees. It sounds like a really simple question, right? But for years, the answer has been, well, murky at best. All that history of your transactions, your spending habits, that is incredibly valuable information. And for a long time, banks have basically held it hostage, making it a real pain for you to take it with you if you wanted to leave. Well, that's about to change. And that brings us to this big idea called open banking. The concept at its core is super simple. It's your financial data, not the bank's. This new rule is going to force banks to build secure pathways for you to share that data with other banks or with other financial apps that you choose to use. You're in control. So how does this actually help you in the real world? Well, let's say you're fed up with your bank's fees or terrible customer service. Right now, switching banks is a nightmare. You have to go through and manually reroute all of your automatic bill payments and your direct deposit. With open banking, that whole process is supposed to become way smoother. Your old bank is required to make it easy to port over your history, which should hopefully make breaking up with your bank a whole lot easier. Now, this isn't all happening overnight. The biggest national banks, they have to be ready to go by April of 2026. But the smaller community banks and credit unions, they get a little more time to get their tech up to speed, with deadlines going all the way out to 2030. And what about those dreaded overdraft fees? Well, there was a big push at the federal level to put a cap on them because they can be so punishing for families. But that rule actually got overturned. The fight is not over though. What we're seeing is change happening state by state. For example, California passed its own law that caps overdraft fees at just $14 for state credit unions. So, the situation is a bit of a patchwork quilt right now. What you pay really depends on where you live and who you bank with. Okay, so we've spent a lot of time on the what. We know what's changing. Now let's zoom out and talk about the why. Because none of these rules are happening in a vacuum. They're all part of a much bigger shift in how regulators think about banking and what's happening in the economy as a whole. On a really high level, what we're seeing is a move away from the mindset that took over after the 2008 financial crisis. Back then, it was all about strict, tough oversight to stop banks from taking huge risks. The philosophy today is a little different. The focus now is on being innovation-friendly, trying to lower some of the regulatory hurdles to encourage more competition and let new financial tech companies get in the game. And this change in thinking has some pretty serious real-world impacts. It gets into thorny issues like debanking. That's a term for when a bank looks at a whole industry, say crypto or illegal cannabis, or even firearms dealers, and decides that even though they're legal, they're just too much of a headache or a risk to deal with. So, they just cut them off from all banking services. Regulators are now pushing back on that, saying that if a business is legal, it deserves to have a bank account. It's a big deal because it affects who gets to participate in the economy. The other huge piece of this puzzle is the interest rate environment. The Federal Reserve, which kind of sets the tempo for the entire economy, has been lowering its main interest rate, and that has a direct line right into your wallet. It determines how much you earn on your savings and how much you have to pay when you take out a loan. And you can see that trend pretty clearly right here. If you were lucky enough to open a high-yield savings account back in 2024, you could find rates over 5%, which was fantastic. But as the Fed has started to lower rates, those savings rates have started to drift down, now closer to 4% or maybe a little less. Now that's still way, way better than a traditional savings account, but it just goes to show how these big economic forces affect your personal bottom line. Okay, we have covered a ton of ground. So after all that, what do you actually need to do to get ready? Let's get to the final and most practical part. Your step-by-step checklist to navigate the new world of banking in 2026. All right, this is it. Let's run through this. First thing, and it's a simple one, get into the habit of checking your accounts on a regular basis. With money moving faster, just keeping an eye on things is your first line of defense. Second, and you should be doing this anyway, lock down your digital security. That means strong, unique passwords for every account. And please turn on two-factor authentication. Third, if you or maybe an older relative gets federal benefits by paper check, don't wait. Get that direct deposit set up right now. Fourth, just pick up the phone and call your bank. Ask them to explain their overdraft policy in plain English so there are no surprises. Fifth, just be mentally prepared. Be ready for the possibility that a legitimate but weird deposit, like a bonus check, might get a temporary hold. Knowing it's a possibility makes it way less stressful if it happens. And finally, with open banking coming, start looking around. It's about to get a whole lot easier to move your money to a bank that treats you better, has lower fees, or pays you more interest. Look, I know some of these changes might sound a little scary, or maybe just inconvenient at first. But it's really important to remember the goal behind all of this. These rules are being put in place to create a banking system that is hopefully safer for everyone, more transparent, and gives you more power. And in this new environment, staying informed is the single best thing you can do to protect your money and make all these changes work for you. So, there you have it. The banking world as we know it is changing. It's getting faster, it's getting smarter, and the rules of the game are different. It is a huge shift, but the good news is now you know what's coming. So, the only question left is, are you ready for it?